Welcome to TradeTheMBI.com. This challenge report is for the 29th, ending April here on the Friday that's coming up. Power day on the return. Of course, we talked about this, the 23%, and it was going to be a question of too many people positioned to one side always creates a nice blowback, and then when they try to flip, goes right back the opposite direction. But we had seen a series of extremes down here moving up from actually much lower low on higher extremes, even though the shakeout here was still lower, but starting its improvement. But I was watching the orange dip, and once it came down on the partial return, some might call it a hammer, but you really would want to see it below the low of the previous one. But those are little technical details from technical analysis that can be debated. But what I always notice is that magenta when it stays above yellow, because it makes for an easy pivot up and is congruent to turnaround moves. It's just a matter of waiting for it to start doing that. And again, the move pretty much early on in the morning, and then it hit stride and took off. And then we had quite a bit of fillback, and there was just this late day explosion that just skyrocketed. And of course, on all positive extremes, intraday will show it to you, and it faded all the way back. Again, white MBI leading this, so any pivot beginnings lower for the magenta, going to go back. And again, NASDAQ still below its 23%. So those are, despite the moves, this is what I talked about a while ago. Fed loves this volatility because obviously it will cause people to move to safety. Safety means treasuries, and hopefully that will help subdue the outrageous moves in treasuries as far as yield goes. And then, of course, like we were talking about the other day, not supporting Japan in its request for coordination also meant foreign buyers, which actually turned out to be the case because the auction that took place yesterday showed foreign investors, and that's because you're looking at an implosion here of the euro. Interesting, as we got below that 105, there was a lot of fighting going on in between there to hold it. So I think there may have been support, because when we get down into that 149 area, it starts to get a little frightening from a central bank standpoint, because there isn't much that isn't going to stop that from then breaking subpar. So clearly you don't see any turnaround at this particular point. Gold supported back up off early decline. It's filled all of the positive extremes that we had from back here when it first made its move. But again, it's where we talk easy manipulation with the paper markets versus the physical. And of course, the EU is ramping up its issues with Russia as far as sanctions. Biden is suggesting outrageous amounts more, and mostly because the Russian offensive has been pretty effective, and they are making significant inroads. They all talked about the Kyiv situation and that, and we won't get too much into that, but it does have an impact on what's going on here, because the West has put an awful lot into this and really creating some economic pain for the world. And if it doesn't work out that Ukraine is salvaged with all of these weapons and everything else, then Russia is actually in quite a strong position. You combine Russia and China, and you've got an interesting concept for economics. I'm not even talking about militarily, we're talking about economics, and the powerhouse of bifurcating, leading world status. It's a real thing. And here, so yields continued to drive up. They were saved off a little bit from that auction, but still, that's pretty weak. If that magenta dips below the yellow there, and you get DOC cyan moving above green at this particular point, and they're literally so close to each other right now. You have cyan above it as it is. We would expect those lows to be revisited, if not lower. And I had as low as 115, which is the outside case, but that would be pretty dramatic. And of course, we already saw it, with the home sales, and of course, then the numbers came out, GDP negative for the quarter. None of this was a surprise to any of us because we've been talking about this for some time, and the expectation is that they're going to get it wrong because they always underestimate the cascade effect of these things and how quickly it goes. And then all of a sudden, it's like, whoa. We thought it was going to be just, based off of what we had looked at from before, and they're not forward-looking dynamics, which is something that we like to look for with our indicators, being slightly ahead of that curve. Bitcoin didn't do as much, which was interesting because Ethereum really did. I mean, it was a little back and forth, but when it caught the later action, it made a nice move. So again, this is something I've been talking about. ETH is certainly outperforming Bitcoin just in a relative sense, and from an accuracy of trade too. I think it's been spot on with that. So we had the magenta on the 50K had started up after the decline, which was the turnaround point, literally right there, and kind of held flat, gave back a little bit, depending on if you were hoping that something was going to change, but at the second time, you could clearly see that wasn't happening with blue in that, so it makes it kind of straightforward. It's a matter of adjusting program exit to manage that setup, working on that one as we move forward into the new month, and of course indicators will be coming out for the new month. And then as we peaked, the rollover, the breakdown below the 33, started the cascade, and boom. And it was still quite volatile back and forth. But needless to say, finished right there from a 5K standpoint. We talked about this at the end of the day. This is the same thing that happened even prior day before on Wednesday. Wait for the market to close, use that low volatility and lack of volume to spike things, and then they drove it up early in the morning. But in this particular case, it started to get some softness pretty quick. Of course, look at that streak of algorithmness. To me, when I see that kind of a streak, that's rarely just singular by programs kicking in all at once. It's something a lot larger. We can speculate as to whether or not there's interventions by various parties, but I think that when we see that series of extremes, doesn't happen all that often until there's something, because obviously you don't see all below the red lines with the decline that goes through. You only see it on the uptick of it, and that's just an indication of the differences, because you don't have the Fed or anyone else actively doing controlled shorting to drive things down in a consistent way. Otherwise, we would be below the red line. Excessive, like in 2008 when there was real selling going on, we would have 12, 13 bars of the extreme underneath the negative 60, creating little magenta histograms. By early morning there, it caught the bid on the turnaround and went to the 100% mark, faded a little bit, but then took back over, literally even right before the green bar there, and pretty consistent because it was within algo levels that we'd had, and then it started to create this run. Look at that. I mean, you have a couple of yellow ones, which is just a fraction under, but all within that. That is what I call a prime target for retrace when it finally gives in. The idea being is that they're going to bring in enough volume in that so many people are going to want to jump in and buy it. But you can see when the regular forces come in, it's a tiny little move, and then boom, it starts to fade a bit and filled this, what I would call that last main run-up section, which was down at 42.65. So still further to go would be 36 and then the 42.16, and looking weak from the 5K as it is right now. So you can't ask for anything better for a month from a volatility standpoint. We have been up and down hundreds of points intraday, and then down the same. It's fantastic trading opportunities, and you just have to be fluid with it and stick with following those signals and not being afraid to flip and go with that. As always, though, I will update the indicators, have them out for before Monday, so that well, actually before even Sunday afternoon for Hong Kong Open, and we'll be all set for another month of this excitement. Because I don't think this is the end of it. I think this is just the start of how wild things are going to get as we start to get some serious unfolding. Because we're going to end up with this dynamic between the street that believes that the Fed will be halted in its tightening, and those that think that it can't stop that because inflation has still not even abated. But the idea is a slowing economy certainly will have that effect theoretically, except for those who remember the stagflation of the late 70s, in which case you had inflation with also a horrible economy. So that is your worst case scenario. And this automatic idea that just because, Q1, the Fed still believes that the market and everything is strong as far as labor market and everything else. And of course, we're still well elevated at 4,200 for the ES. We're outside normal wages anyway, so I don't think they're going to really care if that moves back more towards a 3,800 or a little bit lower. Would be very reasonable. So we'll keep an eye on it. As always, though, you can look for me on the Skype chat, and I will give you any updates as they happen. Trade well. We'll talk to you later.